Hey everyone, I'm your favorite host, Marcus Norman of Gentleman Style Podcast Show. Your favorite host coming to you live. And I have the incredible Mr. Yonah Weiss. This man is the man of the hour, and I'm so glad to have him on the show today because we're going to talk about real estate, my favorite subject. You all know our favorite subject is real estate. But this is a different slice of real estate, and you all want to stay tuned for what this incredible man has to say. You won't want to miss 1 second of this episode. Here we go. Hey everyone, I'm your host, Marcus Norman of Gentleman Style Podcast Show, and I have, again, a powerhouse speaker. If you don't know who I am, I'm Marcus Norman of Gentleman Style Podcast Show, your favorite host and gentleman of the show. But today, I want to shine a light on this man who I'm bringing to the stage. He is the Regional Business Director of Madison Commercial Real Estate Company. But they do something a little bit unique that you probably haven't heard of, at least from me. And we're going to talk about cost segregation. And I couldn't think of a better expert to bring to the show. Mr. Yonah is a powerhouse with property owners saving their tax dollars and business dollars. And his company, Madison SPECS, a national cost segregation leader, is well known throughout the United States and abroad. He has assisted clients in saving hundreds of millions, that's millions, that's several zeros of dollars on taxes through cost segregation, which we're going to learn about today. So help me welcome to the stage the incredible Mr. Yonah Weiss. Welcome to the Gentleman Style Podcast Show, sir. We love you. Thank you for being here.
Well, thank you, Marcus. It's a pleasure to be here. Thanks so much for having me on the show.
It's a pleasure to have you, sir. One more round of applause for Mr. Weiss. Sir.
Rhymes with nice.
Absolutely. You deserve it. Sir, your resume is extensive, and you have done some incredible work at Madison Group. And your company, this company, is changing the way real estate investors invest their tax dollars. So can you give us a spectrum of what all Madison Commercial Real Estate Group does?
Absolutely. So Madison Commercial Real Estate Services is a national leader in many different areas, specifically title insurance. Madison Title, known throughout the country for commercial. Anyone who buys a property, you need to have title on your property. But one of the things that I focus on is the group within that called Madison SPECS. And what we do is focus on cost segregation. And like you mentioned before, it is an incredible tax strategy that helps save people, millions of dollars. And we've saved people, in the billions of tax dollars. And it's just incredible to see day after day people doing the real estate game and learning about the real estate tax benefits that come along with it. And you may hear about that. Oh, there's tax benefits that come with real estate. What is that? And most of the time, it's the depreciation and cost segregation, which is what we do.
Absolutely. And so that's significant. And so this is new. It's new to me, and it's new to probably some of my audience members. But how long has this been available to us? How long has cost segregation been a tool in real estate investors' tool belts?
It's taken different forms, but it's been around since the 1980s, really, is when it was first kind of introduced in its current form. And like I said before, it's really depreciation, which is a tax deduction that any real estate investor or owner, besides for your personal residence, if you own a rental or investment or business property, you're able to take this tax deduction called depreciation. What cost segregation is just an advanced form of that, by breaking down the property into its different components or segregating that cost, that purchase price, into different categories and allowing you to take larger tax deductions in the earlier years. So it's been around in its current form for about 40 years or so, like I said, but it has taken different forms, and some different laws have been passed over the years to actually help it become more beneficial for real estate investors.
That makes sense. And that's huge. And that's big, right? Because the biggest investment, right, is not only the cash flow, depending on what type of asset of real estate you get, but it's also the taxes. There's so many tax benefits that people hear about when dealing with real estate. And so this is a tax benefit to us. This is a tax benefit to real estate investors. Who is your target audience? What should someone have beforehand to make them consider getting a cost segregation analysis? What do you recommend?
Absolutely. It used to be only relegated to larger commercial properties, but it's become much more affordable. And so, to answer your question, any property purchased for I generally say over $200,000 to $300,000. So even on the low end, you can really get any tax benefits. Obviously, because of the nature of what we're doing, the benefit is even greater when you're dealing with a larger property, because the benefit is actually proportionate to the purchase price. So we're talking about $200,000, $300,000. You can certainly get a $20,000, $30,000, $50,000, $100,000 tax write-off. It just keeps going up and up and up as the purchase price gets higher. So if you're dealing with very small, under $100,000 single families, things like that, it's probably not going to be worth it. But once you get a little bigger, it is going to be worth it.
So there's no set number of properties I should have, and that number is based off of the property value on what it's appraised for, or what I buy it for.
So what you buy it for, that's the thing. The IRS looks at how much money was spent. But the great thing is, it doesn't mean that you actually have to spend that money, because it's also taking into consideration the bank's money. If you get the property with a leverage, meaning down payment, let's say of 20%, and you buy a property for, let's say, $200,000, and you only put down $40,000 on it, you're able to take that $200,000 of depreciation, and you're able to take that tax benefit. Now, you can't take it all up front at once, but yeah, it would be great if you could. But they've made the rules that depreciation you're able to take over a 27.5-year period for residential properties, or a 39-year period for commercial properties, which means you only get a little bit every single year. That's regular depreciation. But what we do with cost segregation, you're literally able to take sometimes 20 to 30% of that purchase price and take it up front in the first year. And that's really the huge benefit.
So hold up, let me get this straight. I get to reap the benefit of a property even if I didn't spend the entire amount of that property, I can still write off the full scope of that property, the full value of that investment.
That is correct.
I may, in some cases, depending on what type of real estate deal you do, you may not have put very little money down or no money down. I can still take that write off.
That is correct. That's one of the amazing things about this. That's absolutely right.
That is phenomenal, and that is big. That is huge. And you said this has been around for a while. This isn't new. This isn't something that was done within the past couple of years. We've always had access to this. Why is it so people are still not doing cost segregation? What is the biggest experience in your experience? Why are clients not doing this more?
I think the main reason why people are not doing this is simply because they don't know about it. And you can take a poll from anyone that's watching this or listening to this. Have you ever heard of cost segregation before? I mean, if you have, write yes in the chat, right? Yes in the comments. If you've never heard of this before, right no, or whatever. That is the main deterrent for people not doing this, simple lack of education or lack of knowledge of this tax benefit. And the amazing thing is that even though it is a tax strategy, most accountants or CPAs, if they're not real estate focused, they may not even know about this. Even though the rules come directly from the IRS, from the tax code, still, it's something that if you're not focused on this, you may not know about it. So you're missing out. And that's why it's so important to educate yourself, to listen to podcasts, shows like this, and read up, because there's so much out there that you could be missing out on. So
I got a lot of bozos and scammers in my inbox, right? I got a lot of weirdness in my inbox. And so how do I tell a cost segregation expert versus, because you're saying it's not necessarily your CPA that does this. It's not necessarily, your bookkeeper or an accountant that does this. You need a bona fide expert. How do I know someone is an expert in cost segregation?
Well, they have to have been on a podcast. I mean, obviously, that's the number one. That's the number one reason to know they're real. No, but seriously, it's a great question. Cost segregation is, like I said, all the rules are mandated from the IRS. So it's just a matter of, okay, is this something that my accountant is willing to sign off of? There are plenty of companies out there. Madison SPECS, obviously, we're the largest national company that does this. But there are many other companies out there that do this. I would just look into, get some recommendations, get some, find out how long they've been in business. We've been in business for 17 years. We've done over 20,000 cost segregation studies across the country and counting. So it's something that you can look into. If someone says, oh yeah, I've just been doing this for 2 weeks and doing it out of my uncle's garage or whatever, you may be a little wary about that. But make sure that they are reputable. There are CPAs that are actually signing off on it, meaning we have CPAs on staff that this is all we focus on is the cost segregation. So we're not an accounting firm. And so make sure that they need to sign off on that, because actually one of the requirements from the IRS.
Makes sense. Mr. Yonah Weiss, y'all. Weiss, forgive me. I'm gonna get it right.
You get it.
This is
Weiss Advice. This is Weiss Advice. Just say it 10 times fast and you can get it.
I love that. Thank you. So much grace. And did I fail to mention he had a heart of gold, y'all? Super. We have to go to a quick commercial break. We have to pay some bills, y'all, but don't go away anywhere. We'll be right back.
Good day, podcast listeners. This is your boy, Marcus Norman of Gentleman Style Podcast Show. I wanted to let you guys know that we will be rolling out a new feature and adding a join sponsor button next to the subscriber button here at the bottom of your screen. Once you click the button, it will display 3 membership levels. Gentleman Gentry, which is our entry level, Duke Duchess, which is our season level, and the Emperor and Empress, which is our most sophisticated level, which you will receive unique perks and benefits at each differing level and gain access to our community tab. We will also be sharing polls, upcoming events, and interviews, as well as receive feedback from our sponsors directly. Your support helps me find new and exciting guests to bring to the stage live. Well, in order to get the higher end speakers, it requires, you guessed it, money. So thank you for tuning in to my channel. And if becoming a sponsor sounds good to you, then select the join button below and choose your desired sponsor level. Let's continue to grow and serve the future of generations of men and women to come. Love you guys. Bye.
We are back to the Gentleman Style Podcast Show. And here we have Mr. Weiss spilling the tea on cost segregation. If you missed any of what this phenomenal man had to say, go back, scroll back, and check him out. We are on all social media platforms, iHeartRadio, iTunes, Facebook business page, YouTube, and anywhere you get your podcast. But this man is spilling some incredible information on cost segregation, how you can save thousands, 10,000, 20,000, possibly even more on your investment real estate property. Is that correct, Mr. Weiss? You can say this is only applicable to rental property. I can't do this on my personal residence.
That is correct. You cannot do this on your personal residence, but any business or investment or rental property, you can get this tax benefit for.
And this is commercial and residential, or just commercial?
That's right. Commercial, residential. It can be a single family. It can be a multifamily. It can be office, industrial, retail, self-storage, a golf course, you name it. Anything you can do it on.
Ooh, save. But you guys got to get a bona fide cost segregation expert. You can't just go to any old Joe Blow or some random guy on YouTube that you found today, right? You got to vet them. You got to ask the right questions. What are some good questions that people should ask when interviewing someone to do cost segregation on their commercial or residential property?
I think the first thing you need to ask is this too good to be true? Is this for real? And I think that's something a lot of people kind of question. If this is so, how come my accountant didn't tell me about this beforehand? And that's a really common thing. But one question you're really going to want to ask, and is what are the actual tax benefits that I'm going to get? How much is it going to cost? Is this something that can be done, remotely? Can you do this in Tennessee or Oregon or California or Texas? And the answer to all those questions are, yes, it definitely can be done. We always like to run a free analysis, a free estimate up front, so you can know, number one, how much is this going to cost you if you want to go through with a full cost segregation study on your property, and number two, what are the actual tax savings going to be? We can provide a free, like I said, conservative estimate, so you can already know ahead of time what you can be getting. So if you buy, let's say, a $1 million property, you can know ahead of time, I'm going to be getting a $200,000 tax write-off for buying this property. And so this is something that is really important. You want to know up front before you're going to spend $1.
So you said the magic word, and our mascot, the Gentleman Style mascot, loves the word free. So you said it today. We love free. We love free on this episode. So that is huge. So free, you can get a free consultation. What you said, it's a consultation analysis? It's a full-blown analysis, or just kind of like a mock analysis?
Yeah, it'll be, a couple page kind of charts and graphs just showing you what the difference between taking regular depreciation versus doing what I like to call depreciation on steroids, the cost segregation method. And so, yeah, it is a couple page analysis that will just get you ahead of time to know what you can expect by doing a full study, which ends up being, an 80, 90 page report, very detailed, breaking down every component of your property.
And not to get into the science of this, but what's involved, right? Cost segregation isn't something that can be done virtually, right? You have to actually have someone go out and inspect my property. Is that correct? Or can this be done virtually? How does this work?
So that is correct on a couple levels there. So yeah, it can be done virtually. So you're right about the engineer component to it. And that's one of the biggest things that you need to break it down. You talk about the science of cost segregation. It really is a science project, because we have our engineers come to a property either physically, or with the onset of COVID, really transition to doing a lot of them remotely through a video call, a video walkthrough on many types of properties. We can get that done and allow our engineers essentially to see everything that's inside and outside the property. We take a very detailed accounting of all those components. And so the way that it breaks down is, instead of depreciating the whole property, like we said, taking a tax write-off, an even amount over a 27.5 year period, you can say, well, the structure depreciates on 27.5 years. That's like the walls, the roof, the doors, windows, and floor and infrastructure. But there are many components like furniture, fixtures, equipment, window treatments, cabinets, flooring, like, vinyl or carpeting. All of that stuff that's non-structural actually depreciates on a 5-year schedule. So our engineers are breaking down the construction of the property and identifying what the value of all those individual components are. So the real name for this is component depreciation. Okay, that makes a lot more sense than cost segregation. Weird name that the IRS adopted. I don't know why, but essentially it's component depreciation. So that's what we're doing.
That's huge. That is big. And so listen to that. So there's different components, and there's actual component, a piece to this where an engineer is actually coming out and looking at your rental property, y'all. So that's big, right? And that's big. But again, the benefits, what's it worth to you to pay that cost to have someone come and give you a $20,000 tax write-off? That's big. And in some cases, take advantage of that free analysis, right? To kind of know what if it's worth it to you. Can you do multiple properties, or is it done one at a time? How does that work when you have a real estate investor who has multiple properties? Do you do you do the whole portfolio, or just you split the portfolio up in separate parts?
So the great thing about this is it is a tax strategy, and it's going to be beneficial to the individual based on their situation. So you may have cases where you want to get as much tax write-off as possible. And in that case, you can do this on every single property that you own. And it is a one-time thing that is done per property, per owner, which means, and that's the amazing thing about this, depreciation is really just like a borrowed term, because it starts, this 27.5 years begins when you buy a property. Okay, it doesn't matter if the property was built in 1927. If you buy the property today in 2022, at the time of this recording, you can start your schedule, your 27.5 years, this year. And so it's based on your purchase price. And if you sell it in a year from now and someone else buys that property, they get to start and do the cost segregation over for themselves.
Wow. So I'm too excited about this, right? I'm a doom and gloom. There's always pros and cons to everything. What are some negatives, sir? Can you tell us if there is any? What are some negatives that people should be wary of?
I think the biggest negative or downside to doing this is that you have to be aware of if this is going to be beneficial to you, both on the short term and in the long term. So if you're a real estate investor and your plan is to continue to buy properties year after year, this is probably the best strategy out there from a tax perspective to allow you to scale your portfolio by creating more tax deductions. That just creates more cash flow. The downside is when you sell a property, you're going to be subject to what's called a depreciation recapture tax. Okay, recapture tax doesn't mean, like I've seen a lot of forums out there and people discussing this, saying it wrong, that you have to pay back your depreciation. It does not mean that. It just means that you are going to be subject to a tax as a gain, meaning like a passive gain, a capital gain. Because you've taken this depreciation deduction, you're going to be subject to a tax upon sale. So if you do plan to continue buying more properties year after year, that shouldn't be a problem, because you can usually get around that or defer that out or even offset those gains from other deductions along the way. However, it is something to be aware of, but other than that, there's really no reason not to get this done. Like I said, if you are a real estate investor and you're planning on continuing to buy.
Spilling all the tea. Well, not all the tea. You gotta get connected to him to get the tea. But this is huge. This is big, y'all. This is huge. If you're a real estate investor and your CPA, your accountant, your bookkeeper has not mentioned any of this, this is the moment for you to take advantage of and take those write-offs and take advantage of those write-offs now. And so this is huge. Sir, we talk about money on this show. I like to talk about money on this show. Sir, how much money does this cost? What should someone have to be ready to spend when paying for a cost segregation analysis?
Absolutely. It's something that is really on a property-to-property basis. It's not based on the tax savings, so it's not contingent on that. Our fees run from anywhere between about $3,000 to about $10,000 based on the size and scope of work of the property. Again, obviously, $3,000 is going to be like on a single family. $10,000 is going to be like on a 700,000 square foot shopping mall or something like that. So there's a lot of properties in between there, and so I think on average about $5,000 is going to be the cost of most properties. So it's usually, like I said, over a few $100,000 purchase price, it's a no-brainer, because you're going to be 10xing your savings in terms of the tax results. And the higher the purchase price, the more tax benefit there is, yet the cost of getting it done does not go up.
Absolutely. And if you have a good CPA, he'll help you write off that cost as well.
Exactly.
But don't listen to me. To protect my guests, right? Consult your CPA for all of this advice, for tax counting advice, CPA advice. Consult. This is not considered investing advice. This is just information. My goal is to arm you with the experts who have the information, and for you to do your own research and seek him out and get it for yourself. So this is big. This is huge. Round of applause. Sir, what bit of advice would you give to that real estate investor who's on the fence about doing, cost segregation, but they're not sure, right? It's their first or second property, not too big of a portfolio, maybe 200, 300,000. What advice would you give to that young entrepreneur who's doing his first deal or second deal?
I think the biggest thing you can do is, number one, educate yourself. So keep listening to podcasts like this. Surround yourself with other people who've been doing it a lot longer than you have. And there are so many people out there willing to share their time and expertise. And if you can add value to them in any way, then I'm sure they're willing to share their time and advice with you as well, even if not. So that's the biggest advice I have is, take the time to educate yourself and learn about all these different strategies like cost segregation. There are dozens of them out there that are each one is going to save you money and help you scale faster. For sure. Any questions that I didn't ask? I feel like this is a great topic, and I don't want to miss anything. I know I can't capture it in our time frame, but anything that you want to put out that I've missed that I should have asked you? I think there's so many things that this is a complicated subject, and we could go on for another hour or so talking about all the different aspects of this. One thing that does get asked a lot is, do you need to be a real estate professional in order to take advantage of this? And this is something that, to a certain extent, yes, because taxes are treated differently based on the type of income that you have. So rental income is treated as passive income. Your normal W-2 or 1099 or any type of, that's considered active income. So typically speaking, this depreciation deduction, the cost segregation, can only be used to offset or to reduce your rental income, your Schedule E, your passive income bucket. However, if you are a real estate professional, meaning you're full-time in real estate business, you or your spouse, either one of you, only one of you needs to get this, then you can also use these deductions against your active income. So really important thing here, it doesn't mean that you can't benefit from this at all. It just means that there are going to be some limitations with regards to the benefit if you're not a full-time real estate professional.
And that's key, y'all. That's, wow. I'm glad, thank you. I'm glad you said that. And that's key, y'all. He's not stressing that word just to say it, right? There is a classification of real estate. You can't just be just your Humpty Bumpkin person. You have to be classified as a real estate professional. And that is a actual classification that you must, there's so many amount of hours that you and your spouse have to be involved in the day-to-day actions of real estate. So if you're the type of real estate investor that's saying, I just read the 4-hour work week, that's not going to work if you try and classify yourself as a real estate professional. There are hours that you have to dedicate and prove that you commit to the profession, the skill, the trade. And so he's not just saying that. So thank you for saying that. That is huge. Sir, you have been absolutely incredible on this show today. I thank you for taking time out of your busy day to give back in this way. This is phenomenal. How can my audience connect? How can we learn more? And how can we grow with what you're doing?
Well, I'd be happy to speak to anyone. I'm pretty active on most of the social media platforms. LinkedIn is actually my biggest one, but you can find me anywhere you listen to podcasts at my podcast, Weiss Advice. Really easy to remember the pronunciation of that. Or you can go to YonahWeiss.com, which is where you can find out more about what I'm doing and about to get that free estimate that we talked about before.
Yes, connect. A podcast professional. I'm not going to tell y'all how I found him. But connect. You guys got to get this knowledge. If you are diving in, if you're doing any kind of real estate, you just heard it. Residential, commercial, multifamily, duplex, land, anything. Can it work on land, Mr. Weiss?
It cannot work on land itself because land itself does not depreciate. So you're just talking raw land. There's not going to be any benefit there. Makes
sense. Makes perfect sense. Yeah. Land goes up in value. If I didn't know that. I forgot. I knew that. I just forgot. But thank you again. Thank you for being on the show. This is impactful. And I want to say this to you, Mr. Weiss. Don't ever quit. We need what you're doing because the world is crazy right now. And we need this advice. So thank you for sharing today. Absolutely. And I want to say this to my audience on the Gentleman Style Podcast Show. Thank you all for tuning in. I hope this message was helpful. I hope this was impactful. And I hope this helps you take your real estate game to the next level. This is next level stuff. Mr. Weiss is next level stuff. So check him out on YouTube, LinkedIn, and anywhere you can find him. However you find him, because you need to get involved with this movement. Like I end every show, take care of your friends, take care of your family, and always, take care of business. This is Marcus Norman of Gentleman Style Podcast Show and Mr. Weiss signing off. We love you guys. Bye.